What's up, guys? It's Bandit FX here, and today I'm going to be covering the US30 short that I took today on March 25th, 2021 during pre-New York session. So let me move the chart back to basically where it was when we got on the 6:30 a.m. This is where we were on US30 on the 30-minute time frame. Just a very sloppy range, a whole bunch of consolidation going on here. Um, I basically had my zones marked out. This was resistance. This was our most recent support. Yes, you could say there's a support here and there's support here and stuff like that, but I mean, this is the 30-minute time frame. These candles really aren't that big. There's not that much of a range to catch with super clean traffic. So I didn't feel comfortable taking a sell or a buy anywhere in this sloppy range. I'd rather wait until it just breaks out of it and has a much higher probability of going where I want it to, rather than just being in a sloppy range and could stop me out, wick up, hit my stop loss before going to my take profit, things like that. So anyways, as time went on, next 30-minute candle, we ended up right here. Now let me break it down to the 15 minutes so you can see the next 15-minute form. So here we are. We're right at support, right at this previous support, right? So at this point, I was basically looking at the 5-minute candles to see if we were going to get that break below. And the reason that this is significant is because if you take a look at the daily time frame at this point, okay, obviously, I don't know why it's showing future price, but at the time, we had made this wick up already and we were starting to come down, right? So price was going to break the previous day's low. And if you know anything about impulse entries, we had a bearish candle, we had a weak bullish doji. As soon as we break the lows of this candle, that would be an impulse entry, normally on lower time frames, but this was the daily. So we're now breaking the low of a daily support. So that's a very significant thing to happen. So let's take a look back at the 15-minute time frame. Okay, so I'm going to go back to the 5-minute. We're at support, right? Let me go a couple candles in advance. Okay, so now we're looking at an impulse entry on the 5-minute. Typically, it's a very risky trade, but because of the volume we had in the last 30-minute candle that brought us down to this level, I felt pretty confident that price could continue down. So our next candle, basically once this low got broken here and I started seeing the volume come in, that's when I entered the trade. I had my stops above the 30-minute candle. Let me I'll put the short position right here. So I took the trade at about this area. My stop loss was above the 30-minute, or was it the 15? I think it might have been a 15-minute candle. Yeah. Well, no, it was the 30. It ended up being the 30-minute candle. So I had a pretty big stop loss, but it was very safe. I could have managed risk easily in this area. Um, it was a little bit less than a 1-to-1 for my first take profit, and the reason being that I have this zone marked out is if you look in the past, it'd probably be easier to see on the 30-minute time frame. If you look at the past, it did range here a bit before continuing down. So I was being very conservative. I knew we were coming down to here, no problem. Um, but I did want to secure something in case price went against me. My full take profit, however, was all the way down here to 32,140. Um, basically at this level right here. Let's go back so you can see it. This rejection area right here. It's been resistance a few times. It ended up being resistance, and then price continued up. So this is a very key level to keep in mind. As price went down, let's look at the 5-minute. Basically, as price went down, came down. This is where I actually secured partials and I moved my stop to break even. Because we were coming close to the zone. I knew we were going to get a bounce. Didn't know how soon we were going to, but I wanted to secure something. So I closed partials right here. I closed, I believe, 50% of the trade because I really wanted it to run, but I moved my stops to break even because I was anticipating the consolidation. And why sit and draw down when you don't have to? I mean, that's how I always look at it. If I'm in profits, if I'm anything over 5 pips in profits, I'm moving my stops to break even. If it comes back to my entry, so what? I can get a better entry price. Why would you sit and draw down when you're already in profit? It makes no sense. Why would you risk losing money when you already had money in your pocket that you're literally giving back? So closed partials. What ended up happening is I ended up getting stopped out by this wick right here. But some people in the Discord didn't move their stops and they actually held. And this is how the trade played out. We had a little bit of consolidation, and then basically price melted straight down to our take profit. So overall, this was a 2.5 R trade. It was a pretty good trade for me. I didn't personally get as much as I'd like to out of it, but that's just because me playing very conservative. Um, Move my stops to break even early, especially with something like US30, and I'll show you why right after this. It moves very fast and it changes direction very fast. So, um, say this would have held and this would have been the bottom, price could have stopped me out within minutes. So this is still on the 5 minute time frame. If you take a look at how fast price basically climbed right back up and rejected that area, it was within an hour. Like price bounced right off our TP2 level and just flew straight back up, bullish, and basically reversed that entire move. So yeah, look at this hourly candle. We took 4 hours to come down to this level and 2 hours to basically completely um, mirror this move down. So yeah, guys, that's the US30 short position I took today during pre New York. Let me know what you guys think about the trade. Leave a like, leave a comment, and if you haven't already, please subscribe.